late 2006, 2007, launched our first fund then. And if we take a step back to my broking career, I was both an institutional broker, but I also used to manage a balance sheet. And so when I left, I first set up what was called a multi-strategy fund, and that was with a strong value bias, but also undertook arbitrage, cross-border arbitrage. And as the market moved towards the financial crisis, that product really struggled. It was too sophisticated for the market and struggled to raise capital, and really we decided in 2008 just to simplify it and really take it back to a core value fund that was very much geared to the retail investor. And that core value fund that we now have, which I manage, really invests primarily on three principles: price to net asset value less than 1 times, shareholders' equity to total assets greater than 50%, and must have a consistent history of paying a dividend or returning capital to shareholders. And we found that was a much better way to try and explain it to our investors, who are really retail investors. They are not sophisticated institutions. They are much more retail orientated. And with the benefit of hindsight, their eyes really glazed over on our first fund and they didn't understand it. So we launched the Elevation Capital Value Fund in December 2008, and that fund is a continuing fund today. The other fund was eventually merged into the value fund, and we find ourselves with two products. And the other product we have has really evolved out of my experience of raising capital from people, and that has been that when you are a value investor sitting in New Zealand, there's only so many stocks that you can purchase in New Zealand, and for that matter in Australia, because in my opinion Australia is actually quite an expensive market when you look around the world. And therefore we have looked overseas for opportunities, and our portfolio shows that. But the natural comeback from people when you're talking to them about what you do is, "Oh, but Chris, how can you do that from New Zealand? Oh, but Chris, how can you look in Japan? Oh, but Chris, how can you look in the United States?" And that is the natural response. And it's a frustrating response, because I think our returns over time have proven up what we're doing. And you can look at a number of stocks in that regard. But so I really thought about that, and I thought, well, if you don't like what I'm doing, I'll go back to my old broking days and go back and see some of the old value investors that I used to service in New York. And I created in April 2011 a fund of funds that invests into well-established old value managers in New York. And at present, who are we invested with? Sequoia Fund, run by Ruane Cunniff, Third Ave International Value Fund, run by my good friend Amit Wadhwani, and IVA, the Global CCAV, run by Charles DeVoe, who was formerly with First Eagle, who were a big investor when I was a broker back in New Zealand. So that really takes you to where we are today, with two products, one that I run and a fund of funds that we offer into the market. And the fund of funds has created a lot of attention, because these quality of managers have never been offered in New Zealand, and it's a very unique offering, and one that I think if you look at New Zealanders' general portfolios, they are well overweight New Zealand and Australia, and they should be more diversified. Owning BHP, News Corporation, two Australian banks is probably not enough diversification for most people, in my opinion. And these managers offer them a way to diversify with proven track records and a strict and strong adherence to margin of safety. I mean, they really are some of the best managers. So it's also a great way for me to benchmark myself against what I'm doing. And that's exactly what I do with my fund. So I've set the bar high, but that's the business we're in.